Hello A plus traders, welcome again to our YouTube channel. Today I want to share with you the best 6 stocks you need to trade during this market crash. I know everybody, there's panic in the market, investors are pulling cash from the market, and even the retail traders, they are worried. But as a smart trader and also a professional trader, there are still ways you can trade. You don't need to predict the market. All you need to do is follow price action. So I'm going to share the top and the best 6 stocks for you to trade during this market crash. But before we start, I want to enlighten you on something. This week we have the interest rate decision on the pound. Look at it here, interest rate decision on pound. That will be on Thursday, and most economic calendars like my Facebook, Forex Factory, investing.com, most of them are forecasting that the pound, the Bank of England is going to increase the interest rate from 0.1 to 0.25. I don't think that is visible, or I don't think that will happen. This is why I'm saying that this may not happen. Just some days ago, on the 19th of March 2020, that is like days ago, they held an emergency meeting and interest rate was reduced to 0.1%. So today, this week, I don't think they are going to all of a sudden increase it from 0.1 to 0.2. Why this interest rate was reduced was because of the pandemic, the coronavirus, the uncertainties in the market, and because of the economic markets are diving down. So fast forward to today, we are just few days away from 19th of March. So I don't see, it's not visible to me. My personal opinion, I don't think the Bank of England is going to just rush and increase their interest rate after few days of saying it should be at 0.1. So just keep that in mind, and also keep an open mind. It's all trading. We are talking about probabilities here, so just keep an open mind. It may happen they increase it, but what is visible here is that they will not increase. I believe you understand with me. So let's jump into the chart and see the best stocks to trade during this down market. But before we continue, subscribe to our YouTube channel. Go to YouTube and search A Plus Trading Hub and click the subscribe button and subscribe to our YouTube channel so you don't miss any of our videos. So let's start with we start with McDonald's, yeah, this one. Now look at the chart here on McDonald's. It has been trending higher since 2014. Price has been pushing up, and though we have been seeing series of correction like what we had here and another one here, and this was short-term price correction too, but right now we have this deep move, and if you should pull out our FIP starting from here, you see that means price have gone below the 38.20 Fibonacci retracement level. So here will be a good price level to start looking for buying opportunities. So don't just jump in and start buying right now. Wait for price to continue pushing down gradually, touch this, then watch out for bullish impulse from here and rejection, then you buy it back to 220 price zone. I believe price is going to break that highs in months to come. Okay, the next one is CocaCola. Let's look at CocaCola. CocaCola is a little bit similar. you see price has been pushed, trending higher, higher. These are the key zones on this key price zones here: 59, 43 and 18. And if we should look at a FIP retracement, okay, alright, you see price is below the 50% retracement level, is below 50%. So we look out for rejections from 61%. So you can start buying actually. Like for example, let's say you want to, the total risks you want to take on this Coca-Cola is maybe 3% of your trading equity. Don't just jump in with the whole 3%. You can maybe start with 1%, just buy with 1% of your equity. If it pushes down again a little bit, you buy another, you buy again with another 1% till we get that reversal to the upside. So I'm expecting price to keep pushing down, tag the 61%, then reverse to 59.2 price level again. So that is what we have there on Coca-Cola. Let's look at Pepsi. This is another stock I know it's going to rally like up in few months to come. This is what price has been doing, pushing up, and already we see price back down here. If we pull out a FIP, this is what we have here. It's slightly around the 39% retracement level. See price there, but price will not just reverse immediately from here. We may see it push a little bit down to 50% to tag this bottom here, the support level there, tag that bottom there before the reversal. So you can start taking your buy positions, just take them gradually until we get that reversal from the 50% retracement level. So your target should be at the $150 price level. So that will be the target. Now let me give you a little bit hint why I'm projecting this, these stocks will rally for the next. These are all food industry: McDonald's, Coca-Cola, Pepsi, and the market is getting stable because the pandemic is there are vaccines in the market, so economic activities will resume very soon. And once this is resumed, once the activities are being resumed, consumers will come out from their houses, and like, I'm free again, and they'll start buying things. Let's say for example, now that they are indoors, they are not really buying things. They are not buying things from Coca-Cola and McDonald's, Pepsi, but when everything is being restored, they will start buying things, buy this, buy that, buy this. So this will automatically make the market rally again because purchases are being made, people are making orders of products and other things like that. So this will make the price rally again because of demand. The demand will increase. So once the demand increases, price will rally up. So let's look at another stock. We look at Amazon. Since the coronavirus is here and so many people have stopped buying things, like the e-commerce guys, they are not buying things again. So once everything is settled, we are going to see orders from everywhere. People will start making orders, demanding for things, electronics, gadgets, books, as in anything. People will just start buying things. And where do you think they are going to buy from? They are going to buy from the #1 e-commerce site, which is really Amazon. And by when that happens, we will see Amazon stocks rally up again. So we may see price still push down gradually to tag this bottom here before pushing up. Or this is also a corrective structure here. What price is doing here is a corrective structure here. So see, tag the bottom there and go back up. And if we should pull out a FIP, we can see price have gone 23% retracement level. So a little bit slide down to 38. We get a price rejection from there. You take your buy position. So be prepared. The stocks are going to rally again. The panic is reducing, and investors are getting ready to bring back money into the market. So let's look at the tech companies. Number one, Facebook. Alright, look at the Facebook. We have seen this rally, the first price correction, and this is another one after 2 years. So price is at this bottom again. Watch out, look at your lower time frame and watch out for bullish signals. When you get those bullish signals, you start taking your buy entries, your buy position, and your target should be up here at the $220 price zone. So that should be your target up there. And if we should pull out a FIP starting from this lows to these highs, see, price have gone almost 39% Fibonacci retracement level. So we expect reversals from here on Facebook. We will see reversals from there on Facebook. So let's look at another one. Google. This is Google. See, the same thing. Over the years, we have been seeing series of price correction, and this is deep. So we look for price to retest that trend line support there, and which is also going to be, that retracement level is going to be the 50% retracement level, the trend line. So it's a good area of confluence, a good area of value for you to buy from. So you watch out for price to come down a little bit. Once you see some bullish signals from there or bullish impulse from here on the lower time frame, you take your buy position back to this highs here. So that is for Google. That is the best 6 stocks for you to trade during this market crash. So you can look at for short-term sales. When you get that short-term sales, you take off your profits, then start looking for buying signals, buying opportunities, because in coming months and years, these 6 stocks I just mentioned, I just showed you, are going to rally big time. They are going to be huge and big moves. So just pay attention to it. Then let me give you a bonus. The bonus is going to be Zoom. If you look at this chart, Zoom is the only stocks that have been rising during this pandemic. You know why? Because since all the major cities are on lockdown, everybody's working from home, the subscriptions on Zoom are increasing. There is demand on Zoom, so that is why you see the stocks increasing. People are at home using Zoom to maybe communicate with their colleagues, with their co-workers, with their friends to know how everything is going, and maybe also if they are working on a project, they actually use Zoom to discuss and create their action plans and every other thing. So because of this, so many individuals are downloading the Zoom app, they are subscribing to their premium plans, and that is why you see the Zoom stock price is rallying up. But from this chart here, it's approaching a key level. Alright, look at this. If you look at this is a potential channel it's carving here. So in weeks to come, we may see strong rejections around this level. Once you get that, you can sell the Zoom stocks back to this bottom or back to this level here. At least back to this level. But if price breaks this level, we will see it back to this trend line support here. So you can still buy Zoom for short term. You go to maybe to your 4-hour time frame or 2-hour time frame and buy Zoom for short term. But once the market is stable, we will see Zoom drop down again, at least to this level, before the next leg to the upside, or may break down, touch the trend line support before that rally to the upside. So that is all I can cover on this particular episode. I believe you learned a thing or two from it, and also you are going to prepare for the next rallies in the stock market. Okay, if this video was helpful for you, make sure you share this video, like it, and if you have questions, comment on this video. I will be here to help you out and answer all your questions. Don't forget to subscribe to our YouTube channel, A Plus Trading Hub. Go to YouTube, click on the search bar, type in A Plus Trading Hub, and subscribe so you don't miss any of our videos. Thank you.